Hello, welcome to the Crypto with Kash podcast, episode number 17. My name's Duncan Morland. I am your host. You don't need to know anything about me because I am very boring, but I'm joined by our resident crypto expert, Kashaya Bassi. Hello, Kash.
Hey, you're right. How you doing?
I'm okay. As you can see, I'm chilling out in my luxury villa on a coast somewhere, and I see you've got a new room.
Yeah, I've moved into this new room. It's very realistic and
Funky place.
really bright.
Yeah, I like the cushions.
Yeah, thank you. They're very comfortable.
The budget has gone up, so we've invested in green screens and gone all out, and yeah.
As opposed to us just finding this feature now.
Yeah, on the web. We could have been hiding the boring walls behind us this entire time, but it's taken us 17 episodes to find this function. So how are you doing? You okay? You're back in England after spending a few weeks in Thailand. How does that feel?
Yeah. I'm back now. It was great. I had a lot of fun. I went scuba diving, tried loads of different foods. I went island hopping. But the weather at one point, it just got unbearable. I got sunburned on the way to the beach, so I had to turn back before I even got there. But no, it was really good. I would definitely recommend it to anyone.
Yeah. Getting sunburnt on the way to the beach is impressive.
Yeah.
And I guess now you've got English weather to contend to. Although apparently a heat wave is incoming.
Yeah, it's not been that bad actually. Usually when you come back from a holiday, you know, the gloomy weather hits you straight away.
Yeah.
But the weather since I've been back hasn't been as bad as I thought it would. And as you said, there could be a heat wave soon. So looking forward to that.
Fingers crossed, yeah. Because I was just sat on the beach reading a book for a bit, and I had 2 hoodies and a jacket on, and I was warm.
There we go.
On today's talking list, the stuff we're going to cover, we're going to talk about Solana and the Solana blockchain and a recent outage that they've had, which is something that's happened before. We can talk about sort of the ins and outs of that, and then we've had a question from Beck. She says she still doesn't understand what stable coins are. Can we help her? So we could talk about that, and I think that conversation might involve talking about interest rates, inflation, because everybody's using stable coins to generate some yield where there is none in traditional finance. So Let's start with Solana. Kash, what's happened? First of all, what is Solana and what is happening?
Yeah, so Solana is essentially a high throughput blockchain that offers faster and cheaper transactions than other blockchains out there, such as Ethereum. So many of the things you can do on Ethereum, you can do on Solana for a lot cheaper and faster. You can send transactions within split seconds to anyone across the globe using Solana, whereas with Ethereum, you'd be, charged around $30, $40. Sometimes the fee even skyrockets to $300 to even just make a transaction. While on Solana, it's much cheaper. And now with the introduction of NFTs, over the past few months, it's got to a point where the network has been inundated with transactions. So there's NFT launches every single day happening on Solana. And in a sense, Solana seems to be suffering from its own success because the network is so popular now that it's, the network cannot handle the number of transactions which are happening at the moment. And as we saw the other day, it was actually, it had an outage, and the blockchain essentially was suspended for a couple of hours. And now, since then, everything's back to normal. But in a sense, it is suffering from its own success. It's just very popular right now.
Is it with all these transactions? Do you know if the cost of fees is going up on the network, and is it getting slower, or is it just crashing?
I would say it was crashing. The network fees are going up slightly, but it's still a negligible amount. And what is essentially happening is a lot of people are trying to, because there's so much demand for these NFTs, a lot of people have set up bots to try and essentially get access to those NFTs so that they can sell them or flip them for profit. But there's just so many. I think I was reading the article, is just here actually. It says there was 4 million transactions per second for an extended period of time. And And yeah, a lot of these are just bots trying to get access to those valuable NFTs and trying to flip them for a profit.
Are these new NFTs, or is this because like Solana's NFT ecosystem is just starting out and people are trying to sort of replicate what happened on Ethereum and trying to get in, and like get in with those early profits or something?
It's a mixture of both. There are some really popular existing NFT projects out there who are seeing a lot of trading volume coming in, but Ethereum has a booming ecosystem now, and there's maybe tens, if not hundreds, of NFTs being launched on the network. And because it's so cheap to actually launch an NFT project, the barrier to entry is a lot lower than it would be for Ethereum.
Oh, on Solana, it's much cheaper.
On Solana, yes. Yeah. So there are tens, if not hundreds, of NFT launches happening every single day on Solana.
And I'm guessing a mix of legitimate ones and ones that are just sort of all the scammy kind of cash cow style ones.
Of course. As with any technology, there's always going to be bad actors trying to take advantage. NFTs, I would, if you've never been involved with NFTs, I would say go on OpenSea, because now Solana NFTs have been integrated into OpenSea, which is the world's #1 NFT marketplace. You can buy NFTs for 20p, 30p, just to, get used to how it works. And then maybe if you see a piece of artwork that you like, then maybe you can fork out some more money. But I think NFTs are here to stay. And they've been doing very well despite, the overall market downturn.
Yeah, you mentioned in a previous podcast some of the different NFTs that you like. There was a science fiction game one that I had looked at.
Parallels. It's similar to Yu-Gi-Oh! Or Pokemon, and you can use your phone or VR goggles to actually see the
that's cool.
Monsters or the machines fighting each other. It's very interesting.
Yeah, if you're a dweeb like me and you are. I was going to ask you, is that on Solana, that project as well?
No, that's actually on Ethereum.
Ethereum, okay. But do you know if many Ethereum NFT projects have plans to kind of like launch on Solana as well?
There are protocols out there. I don't know if they're up and running yet, but there are discussions that will allow you to bridge over your assets from one blockchain to another, including NFTs.
Right. Okay.
That's not something I've done myself because I'm just sticking to the original blockchain. But I think in the future we're going to see more of these platforms popping up. So
a bit like when you can get like wrapped tokens on different blockchains, like wrapped Ethereum on. I don't know if you can get that on Solana. Yeah, can you? Yeah, so like it's kind of reflects your original Ethereum holding, I guess.
Exactly.
One thing I wanted to ask you about Solana in particular, and I think we've kind of talked about it before, is one of the reasons that it is so fast compared to Ethereum is because it's more from what I read, it's more centralized in terms of who's running the nodes that run the entire network. They seem to be concentrated in a smaller number of hands, basically. So, I mean, maybe it's a bit too much to go into that in depth in this podcast, but the idea is that something that is centralized like that can fail more easily because something that has more nodes, a network that has more nodes spread out, has like more fail safes, I guess, if something goes wrong. Yeah. So do you think that,
generally speaking, I think the barrier to entry for Ethereum, for example, you could buy a miner, set up some piece of software on your computer and be mining Ethereum almost instantly. Whereas with Solana, there are more steps involved. And it's I think you need a lot more Solana to actually become a validator on the network. So it's not as easy, The thing is with Ethereum, it's actually going to be transitioning away from proof of work to proof of stake, and this is set to happen sometime, hopefully if all goes to plan, sometime in Q3, Q4 of this year. The disclaimer is that it's actually been delayed many times before. It's been delayed since 2019, 2020. It was actually meant to happen in June of this year, but one of the developers, Tim Baker, actually said that we are in the final stages of proof of work on Ethereum, and it's likely to happen in the months following June. So it was delayed again, but it's going to happen soon.
Yeah, and he used the word months rather than years or decades.
Yeah.
But yeah, well, it's definitely coming at some point, and arguably the market hasn't priced it in because no one's got any real idea of when it's coming exactly, or it
Yeah.
could not be coming, and then could be coming.
It's
Okay, so
interesting because I was just going to say it's
yeah,
interesting
sure.
because the crypto markets always need some sort of catalyst that causes the markets to go up. You know, in 2017 it was ICOs or initial coin offerings, which saw
Yeah,
a lot of money coming into the ecosystem. And then in 2020 it was DeFi. 2021, you know, NFTs took over. A lot of people are saying that 2022 is the year that Ethereum and the merge event causes the rally, which
mm.
we are accustomed to see with you know, crypto.
Yeah, it's almost like to bring new investors into the space. There needs to be a new, like you say, like a
Narrative.
new catalyst. Yeah, like this now,
Yeah,
narrative that catches and that makes sense to people as well. I guess, like because a lot of like when NFTs last year, you had all kinds of like mainstream publications posting about them and all the arguments about, you know, are they just JPEGs? What can they be used for? Blah blah blah. It, you know, no matter what you think of it, everybody's talking about it, so it's, you know, it just
yeah,
makes everybody's awareness going on. Same with if Ethereum 2.0 comes out and radically changes that, you know, there'll be arguments about whether it's good and bad, but if people are talking about it, you know, it's going to bring more awareness to the crypto space.
yeah, exactly. And even a couple of hours ago, actually, Starbucks announced that they're going to be launching their own NFTs. And as part
Nice.
of the NFTs, there'll be special experiences involved. So by holding the NFT, you might get, you know, it's speculation at this point, but they have said they're going to be including special experiences. So you could be invited to a special event or
Yeah,
backstage access to a certain, you know, concert or whatever. But there are many
you,
different use cases of NFTs, and digital art is just the one that catches most of the attention, it seems.
you'll get an
Um,
extra big smile when you buy a coffee if you hold an
yeah,
NFT. Just flash your NFT for friendliness.
yeah,
Yeah. um, okay, so next on our list of stuff to talk about is Betchat Beck would like to know what are stable coins exactly, and I'd like to expand that out into a bit of a discussion about why they're maybe quite important right now, when we look at the rising costs of stuff, e.g., inflation, and sort of the low interest rates on traditional bank accounts. So, can I just throw that question to you, Kash? What are stable coins?
yeah. So essentially, a stable coin is a token that is backed one for one for the dollar. So tether, one tether is equivalent to $1. They were introduced in a way to allow traders to make their trades on these crypto platforms without having to cash out into their bank account before they can decide on another opportunity to buy back in, for example. With Tether, you could sell, hold your coins in Tether. You know, cryptocurrencies are very volatile. You don't want to hold it in a cryptocurrency if you are trading. You want it to be stable. So you can sell into a Tether, hold it until another opportunity presents itself, and then you can buy back in with that stable coin.
So one stable coin in this case, Tether, is
Yeah,
always worth $1.
exactly. Exactly.
Um, but you can use that tether to buy, you know, more easily buy other cryptos.
Exactly.
I guess like maybe Beck's question is like also how does it work? Like why is one tether worth $1? And you know, for others, so there's some other stable coins would be UST, which is the stable coin of the Terra network.
Mhm.
Um,
There's
help me out.
USDC.
I can't,
So, yeah.
yeah. What else is there? There's
USDC from Circle, I think, BUSD from Binance,
hmm,
USN, which is recently been introduced by the Near Protocol, and there's a bunch of others. I think Tron Network also released their stablecoin as well. The interesting thing about stablecoins is that you can actually stake them on certain platforms and actually yield interest. So you, instead of, you know, with crypto, there are platforms out there where you can stake your crypto and earn interest on your crypto holdings, but that crypto is volatile, so the price of it can go up and can go down. But with stable coins, you can earn interest on an asset which is essentially tied to the dollar. So you can earn interest on a stable coin. And the interesting thing is that the interest rates offered within crypto are higher than any bank out there.
Yeah.
So there are protocols, as you have mentioned, which
Shall I try and share my screen and we can, let's see if this works. And then entire screen, let's have a look. So can you see that?
Yeah.
Okay. So what we're looking at is coindix.com, and this lists current stablecoin interest rates.
Yeah.
So maybe you can tell people what we're seeing here, Kash. And I'll
so there's the interest rates that we can use. So essentially, of course, the ones that are offering higher APY tend to be more risky. So in a sense, by putting your USDC in that protocol, you can potentially earn 42% interest per year. With Tether, there's different coins out there, and there's different platforms upon which you can earn the interest. Of course, the ones that offer, it's a bit blurry, but I'm seeing like 20%, 30%, 40%.
So
sometimes we're limited as to how much stablecoin you can actually put onto the platform. But generally speaking, these platforms seem to be offering 18%. And that one right there, called Anchor with UST, is one of the most popular ones. And I think if you look on the right-hand side, you'll see that platform's actually got the most amount of money.
Yeah, that's 14 billion, is that? Yeah, so that's got 14 billion. Let me just see the highest. Yeah, so that's got the most deposited on that protocol, is the Anchor protocol.
Yeah.
But I guess that's one of the reasons for that is it's got a huge amount of reserves. I guess that network and protocol is relatively trusted. It's been going on for a long time. And it's one stable coin, whereas sometimes you have to deposit a mix of stable coins, don't you, to sort of get a higher return. But yeah, let me just stop sharing that.
And the interesting part with stablecoins is that a lot of people are actually using these yields to combat the effects of inflation. As we saw in America, inflation hit 8.5%. I think it's the highest for a number of decades. But by essentially taking your money and instead of keeping it in a bank and putting it into a protocol like this, you can not only combat it, you can actually earn money on top of that. It's interesting. Of course, there are risks involved. There's smart contract risks and protocol itself. As we have seen in the past, it's important to remember that there is always a potential that code can be exploited, and you can lose your money that you have deposited into these sort of protocols. Some platforms have come out and said, okay, we're going to cover you to a certain amount, but that's not always necessarily the case. And with crypto, because the technology is immutable, if you get your funds stolen, there's no person you can go to try and retrieve the token that you've lost. So that's sort of the risk you're willing to accept if you are going to put your money into these smart contracts.
And I guess you can do a few things like, pick protocols that have been around for a long time, that have a lot of money locked in them. Also, like, you can get decentralized crypto insurance on platforms like Nexus Mutual. I'm not totally, and that does cover hacks, but I'm not totally sure how straightforward that is. But it's definitely, I don't know do you know much about that? Or
not for Nexo specifically, but I think with Coinbase, they announced, I think £100,000 they will cover, or if I'm not mistaken, it was 150,000. Binance announced something similar. I don't have the specific amount in mind, but a lot of these exchanges, which have done very well over the past few years, have actually created this sort of insurance fund that they can use to pay out customers should something go wrong.
Yeah, no, Nexo is a good one as well. But what I said, Nexus Mutual, which is, I don't know if you've heard of that. It's like, it's like decentralized insurance. So you're kind of buying insurance from another investor, or if you wanted to, you could offer insurance.
Okay.
You can like sort of offer that contract and say like, okay, if Protocol is hacked, I'll cover, I don't know, your losses or a percentage of your losses, but you have to pay me. So like you're in the insurance company, I guess.
That's pretty interesting. Okay.
Yeah. And also someone told me that it's quite a good way to gauge kind of safety of different protocols. If the market is saying, like, the insurance rate on this is low, it's saying that the market thinks this is relatively safe. So I thought that was like a cool kind of, I mean, whether that's reliable, I don't know, but but it was a nice way of looking at it, I think.
That is pretty interesting. Yeah.
I got a question, like different types of stable coins, because there's some that are backed by money reserves, I guess, crypto and dollar reserves. And then there's others that are just like algorithmic. Do you like? What are your thoughts on different stable coins, and which ones do you sort of personally trust and that kind of thing?
I mean, personally speaking, I trust the ones which are backed one for one by reserves. There's this whole discussion about whether Tether is actually backed by one for one reserves. They seem to have changed their wording in their terms and conditions a couple of times.
Several. Yeah. I was going to say changed it several times.
Yeah. So before it was one for one backed by reserves, and now they're saying that it could be backed by other sort of assets. Or I haven't checked it for a while, but they do seem to be changing the wording every so often. And then there's algorithmic stable coins, which many of these types have failed in the past. They seem to get exploited. I think Mark Cuban had invested in one called Titan last year. And as soon as people found out that he'd made a big investment in this, some hackers or exploiters found a way to take advantage of the code and essentially ran it all the way down to essentially zero. And Mark Cuban ended up losing a couple $1 million, and that stable coin essentially was not stable anymore. The best ones I think on the market at the moment are the ones which seem to have the highest market cap, which seem to be Tether, USDC, BUSD, and of course USD is also making its way up, but a lot of people are saying it's not fully backed. But I feel like these sort of rumors are always going to exist in the market. It's only natural. So many different participants. There's always going to be people who make certain claims.
So generally, sort of the ones that have reserves and are backed and are transparent about it seem to be the safest bet at the moment. And maybe in the future, someone will figure out algorithmic stable coins that work over the long term and prove to be hack proof. One project that I did see that I thought was interesting was people's ability. Actually, there's two. There was one. So it's basically the ability to mint your own stable coins. I think it's called MAI. That's the name of the stable coin. And basically, I could deposit whatever collateral I want. So I could deposit some Ethereum, some Bitcoin, and it would give me the equivalent in MAI. And there's probably other protocols that do this. And then I can take that MAI and earn a yield on it or whatever. There was another one that I saw where, say, any kind of DeFi app could go and make a stable coin for itself. So, for example, the decentralized exchange 1inch, they had deposited a bunch of 1inch tokens as collateral, and then it had minted like a 1inch stable coin. I've got no idea what anyone can do with a 1inch stable coin, but it's the idea that maybe stable coins in the future will be more prolific, and like those, I think both of those, maybe those were pegged to the dollar. MAI was definitely pegged to the dollar. I'm not sure about.
There are, the thing is, stable coins, Tether, it's one of the first stable coins that become widely adopted. It's accepted on every single exchange. And the question is whether another stable is going to take over. If there are people who worry about whether it is actually backed one for one by reserves, then there are now competitors which seem to be more transparent, such as USDC. And a lot of people are arguing that perhaps within the next few months or even years, USDC will overtake Tether and become the number one, which has never happened before. The interesting thing is that Tether is actually the most traded cryptocurrency in the world, even more so than Bitcoin.
Wow.
If you look at the volumes that Tether is getting, almost every single day, the volume is higher for Tether than it is for Bitcoin and any other cryptocurrency. So I think, that's one of my predictions is for USDC to overtake Tether sometime in the future. And another thing is that more of these projects, seeing the success of UST from Terra Luna, I think a lot of projects introducing stablecoin, as you mentioned. Whether they'll be adopted as much as all the other stable coins have, I'm not sure. I don't think so. But yeah, it'll be interesting to see whether a lot of these other projects start to essentially use the same blueprints as Terra to launch their own stable coin.
And Terra's UST is being backed by a load of Bitcoin. They've been is that right? They've been piling loads of Bitcoin into the reserves over the last month, I guess.
Yeah, and their aim is to become the number one holder of Bitcoin. So I think they're in the process of accumulating up to 3 billion at the moment, but they have long-term plans to go all the way up to 10 billion. And
how much is
said that, the only way we will fail is if Bitcoin fails.
If Bitcoin fails,
big statement to make, but we'll see what happens.
How much Bitcoin does Michael Saylor own? Because
I think 3.9 billion last.
Right. Okay. So have they already got more than him?
They're not yet. Not yet. I think currently they have just below 3 billion or just over. Michael Saylor has close to $4 billion worth of it.
Yeah. Well, looks like we've got some catching up to do then. Okay, so we're closing in on about half an hour, which seems like a good amount of discussion time. Just an arbitrary reason to end the podcast there. But before I do, Kash, I don't know, do you have any wisdom to share for the next few weeks? Crypto or otherwise?
I think it's important when you see prices fluctuating as they are and in the downtrend, it's important to zoom out and look at the charts in the past. We've, as I was mentioning in our Telegram chat before, crypto works in cycles, and we've been through these cycles many times before. And in the long run, it seems to be on an upward trajectory, despite these, shorter term downtrends that we are seeing and that we are in now. Members who joined, last year would remember that we had actually a bear market in April, May,
almost straight away,
July onwards, and went and hit new highs. So yes, crypto does have downturns, but trajectory seems to be upwards in the long term.
Yeah, and I think one of the things is with investing, personally, I think of it as not something you do once, you know what I mean? It's an ongoing thing that part of your income goes towards, and that's easy for people to say that have that spare income. So I understand that, but
exactly.
That's, I have tried to sort of build up positions when the market is down, especially when people are when you read the forums and the sentiment is overly negative. I always use that as a sign to, okay, now I should be buying, kind of thing. Obviously that does require having that income to do that or whatever, but
of course.
But it is something it's very easy to get enthusiastic about the markets when prices are high and you are essentially paying more for the privilege of participating in them, I guess. And that now is, but you've got to have that belief that it's, or have done the research to believe the things you're investing in are going to go back up at some point.
Yeah, exactly. And it's times like these why we like to take profits when we are up, so that we're able to take some money away from the market and perhaps wait for lower prices so that we can buy back in.
But equally, it doesn't make sense to sell, investments that have fundamentally not changed in your outlook for them, kind of thing.
Yeah.
Because markets are down like broadly, but
yeah, of course. And it's not this sort of price action is not exclusive to crypto, as we're seeing.
Yeah,
the stock market is down at the same time. We're seeing stocks show huge downturns. I think Netflix, last I checked, was down 40-50% from its peak. So, we're not used to seeing that sort of price action in the stock markets. That sort of downturn is mainly seen in crypto, but now we're seeing that sort of thing in the stock market, which just goes to show us, in a way, it's indicative of the global financial situation at the moment.
Yeah, and I think with the newsletter, we've got some plans to change things up a bit, maybe, which will introduce an opportunity to get in on even more coins at a time where I personally think, like I was saying, like now is the time to stock up a bit more. But we can talk about that next time, maybe, if we've
For sure.
sorted that out. I'm going to let you go and lie on your lovely sofa in the background there. Enjoy that multicolored cushion. Yeah, and I'm going to go head down the beach and have a quick swim before tea time.
It's amazing. I'm jealous.
Thank you for your time this evening, Kash.
Thanks very much for having me. It's been great as always.
Good. And thank you for everybody listening. If anyone has any questions, you can drop them in the comments on YouTube or send us an email. Any questions about crypto or themes you'd like to talk to us to talk about even. We appreciate if you enjoyed this and you drop us a like and subscribe if you want any more content from us. And if you're interested in joining the Crypto with Kash newsletter, you can get details in the link somewhere around this podcast, be below the YouTube video, or a link if you're listening on a podcast platform. Okay, thank you again, Kash, and we will sign off.
Thank you. Bye.
If I can find the button.